This video was brought to you by Brilliant. Even though he hasn't actually taken office yet, Trump has already upended global politics. He's threatened to invade a whole bunch of countries, apparently forced a ceasefire in Gaza, and now his unorthodox economic policies, which he's promised to implement, have pushed the dollar to a 40-year high. But while this dollar surge might sound like unequivocally good news for the US, it cuts against Trump's stated ambition to reverse America's massive trade deficit and rejuvenate American manufacturing, to say nothing of the destabilizing spillover effects on the global economy. So in this video, we're going to take a look at the US dollar's recent surge, what's driving it, and why it could spell bad news for both the rest of the world and Trump. Dive deeper into politics with our magazine Too Long. Yes, we make a real physical magazine. Find out more by clicking the link in the description. So let's start by taking a look at the dollar's recent rise. Instead of just comparing the dollar to a specific currency, which would end up telling you as much about that other currency as it would about the dollar, the best way to get a sense of how strong the dollar actually is to look at a so-called dollar index, which basically measures the strength of the dollar against a weighted basket of currencies. Now, different indices weight this basket differently, but according to the Federal Reserve's Broad Real Dollar Index, the dollar's value has been steadily rising since about mid-2023 and is now at a 40-year high. So why is this? Well, some of this is just because, as the world's reserve currency, the dollar and dollar assets like treasuries are often considered to be safe or haven, which means that they go up during times of economic or geopolitical uncertainty, even if the US themselves are the source of that turmoil. But some of it is also due to the relative strength of the US economy over the past few years. As we mentioned in other videos, at least according to headline figures, the US economy is dramatically outperforming its peers. According to research by Joey Politano over on X, the US has seen the best GDP growth in the G7 since the pandemic, even when you adjust for things like population and inflation, a trend that only looks likely to continue as the rest of the G7 stagnates. America's overperformance looks even more remarkable when you look at productivity, which basically measures economic output, or GDP, per hour worked, and is perhaps the most important metric in economics. That's because increases in productivity should in theory mean either higher living standards or the same living standards but for fewer hours worked. Conversely, if GDP is going up but productivity isn't, it probably just means that you've got more people or they're working longer hours, which isn't really what you want. Anyway, in basically every other G7 country, productivity has stagnated or actually declined over the past few years, while America has actually seen a pretty impressive increase. Now, of course, various caveats apply here. America is still appallingly unequal, and this growth hasn't translated into economic prosperity for many American households, especially lower down on the income distribution. Nonetheless, it's probably at least true to say that the US has outperformed its G7 peers, and this has invited investment and capital flows into the US, pushing up the dollar yet further. However, quite a lot of the recent rise has also been driven by Trump and the policies he's expected to implement once he comes into office. And you can sort of see this if you zoom in and take a look at how the dollar's moved in the past year or so. The most recent rally began in October, when it started to look like Trump might actually win, and then accelerated after the election. The reason that Trump has pushed up the dollar is that there's a pretty wide consensus that the policies he's going to enact, including massive tariffs and tax cuts, will be inflationary. Tax cuts, for instance, will mean more household spending, putting upwards pressure on prices, while tariffs will just make products more expensive by either making imports more expensive or forcing consumers to buy more expensive American-made alternatives. Now, higher inflation will invite higher interest rates from the Federal Reserve, which will make it more attractive to hold dollar deposits in American banks, pushing up the value of the dollar further. Tariffs also push up the value of the dollar because they're usually bad news for other affected economies and their currencies, which is why, for instance, the yuan has depreciated by about 10% since 2018, once Trump started imposing tariffs on China. Given the value of the dollar is defined by its relation to other currencies, if Trump's tariffs push down the value of other big currencies, like the yuan and the euro, this will effectively translate into a stronger dollar. So what does this mean for the US and the world more generally? Well, it's good news for American households and importers, who now have much more purchasing power and get to enjoy the disinflationary effects of a strong currency. It's also good news for American financiers, given that a strong dollar reflects and reinforces Wall Street's central role in global finance. But it's bad news for both the rest of the world and for Trump, at least to some extent. That's because a super strong dollar makes things a lot harder for other countries and especially emerging market economies, for at least two reasons. Firstly, it makes essential imports like oil more expensive, because international trade is usually denominated in dollars, which can stoke inflation. And second, a strong dollar makes it harder for other countries to find credit for both sovereign borrowing and private investment, which are especially important for emerging market economies. This is because a strong dollar usually reflects the fact that all investors' cash is going into the US, often thanks to high interest rates, which means that there's less spare money going around in other countries. The consequent lack of investment can stunt growth, and higher borrowing costs can undermine other countries' fiscal positions, forcing them into austerity, tax hikes, and in the worst case scenario, outright default. This is sort of what happened in the 80s, when a super strong dollar triggered debt crises around the world, although the risk is somewhat mitigated by the fact that developing countries generally don't issue dollar-denominated bonds as much as they used to. Anyway, as well as being bad for other countries, especially emerging market economies, this is also sort of bad news for Trump, both because it suggests that markets expect the Federal Reserve to resist his inflationary policies with interest rate hikes, which Trump really didn't like in his first term, but also because a strong dollar cuts against Trump's stated ambition of reviving American manufacturing. Now, we've done a whole video on this in the past, so go and watch that if you want to know more. But the TLDR is that a strong dollar makes Americans' exports less internationally competitive, which is especially bad news for America's manufacturing base, who'll struggle to export and might be undercut by cheaper imports. And this speaks to a more general tension in Trump's dollar policy. He apparently wants a cheaper dollar, but his policies and stated ambition to maintain the dollar's reserve status will probably just end up pushing the dollar in the other direction. There's a lot of difficult decisions necessary here, and making huge decisions, especially quickly, is difficult, even for world leaders. The good thing is that brilliant is where you learn by doing, with thousands of interactive lessons in maths, data, programming, and AI. Their interactive classes can help build your critical thinking skills through problem solving, not memorizing. So while you're building real knowledge on specific topics, you'll also be becoming a better thinker. For instance, their Predicting with Probability course can help you better understand and assess the world around you. You can learn to wrangle massive data sets, compare distributions, and master fundamental concepts like Bayes' theorem. Now that might sound a little technical, but with their active learning, you'll learn this by answering questions like, which airline is most likely to have a delay due to weather? And how much more unruly have airline passengers gotten since the pandemic? Data skills are absolutely necessary for navigating our modern world, and Brilliant is the best way to get them. So try everything that Brilliant has to offer for free for a full 30 days by visiting brilliant.org/TLDR, or by clicking the link in the description. And by doing so, you'll also get 20% off an annual premium subscription.